All right, in today's episode, we are speaking to Max Porterfield. He is the CEO of CLLXF Mines, and we're going to be discussing gold, silver, copper, commodities boom, this inflation trade that seems like it's finally starting to really pick itself up in a major way. And so make sure you hit the like button on this side right over there and this side to send this video out to the YouTube universe so more people see it. Give us your gold or copper price prediction for 2021 in the comments right there down below. And it's good to see you, Max.
Thanks so much for having me. It's great to be here.
So it's been kind of a weird situation in the economy, and maybe some of it had to do with all of a sudden you get a new administration, but you're also in the midst of the first time in human history where the government's locked everyone in their houses. And, we had this big crack up boom for a while, but then nobody knew what was going to happen. Where do you think we are? It's obviously a bizarre situation where there's so many people that can't pay their rent. They can't pay their mortgage. We're kind of relying on easy money right now. And no one really knows, does everything fall apart now, or is there an inflation trade? How do you assess what's going on right
now? What's really unfortunate, quite honestly, because this is something that we kind of foresaw for a number of years, at least, on my side of things, and a lot of people that we're talking about. But there's really no respect for the currency any longer, and that's what's led to this situation in the inflationary that we're getting. We're finally seeing the inflation. I think anybody that goes to the store, no matter what the government tells you, I think they can see otherwise. I was just reading an article in Newfoundland, for example, and this is in a province in Canada. The reason why I mention it, because lumber prices are something that's kind of in vogue right now. And this is actually a province within Canada that produces lumber. So a 2x4 before the pandemic cost $3.50. And today, in the same province, if you're trying to buy a 2x4 for a construction project, it's looking like $13.
Whoa.
So that's a big, big move in terms of inflation. And you could say, okay, you can grow more trees or you can just mine more metals or what have you. But when you have no respect for your currency, and, many administrations have shown that, particularly the most recent administration taking over, that's going to have an impact on things. And, up until now, I think really your only go-to was the metals in terms of getting away from that, or real assets. And I've been, really long real assets in general. I just bought another investment property in Texas, because you're right. When the money is as cheap as it is right now, and the cost to rebuild is going to be much more expensive in the future, I think it's in a very, very inflationary environment.
And so how do you think that this affects metals, copper, commodities, et cetera, going forward? Because, people are still seem very unsure of what's going to happen, but it seems pretty clear to me the administrations and governments globally have made it pretty clear they're going to print as much money as they feel like printing. And what do you think the effects of that are? You also focus on copper with your company, and there's a lot of talk about infrastructure. How does all of this affect commodities?
Well, it's going to be inflationary. It's going to be higher prices. So again, if you have a weaker dollar, it's going to cost you more dollars to buy anything, which is why, in terms of the real estate market, while I made an investment I just made, because again, what's the replacement cost if you're going to go out there and build a new home? That's getting more and more expensive because of what they've done to that. And you can see it in commodity prices. I mean, today, copper, for example, is a good bellwether for the global economy, is, at record highs, $4.57 in the last I checked this morning per pound. And if you look at, where the long-term copper price had been over the most recent years, it'd be down at $3. So again, you've had a big move in the metals. You're going to see that across all metals, all real assets. I also see that in the art market as well. It's just a very, very inflationary market when you have a weaker dollar. Now, in the mining side of things, in the metal space, particularly in base metals, I think it's really a perfect storm, so to speak, in terms of the price action that you're going to see over the coming next few years, particularly in the copper market, zinc as well. In terms of base metals. And that's because of the lack of investment into exploration development of new mine supply. So you already had a really, really tight market. If you look at LME inventories for copper in particular right now, it's very, very low. And you've had a lack of investment for exploration to find mines. And for give you an idea, from a discovery hole for a copper discovery to production, you're looking at 7 years on average. So it's not like supply just suddenly comes online. Meanwhile, we've got this big shift. So suddenly, the hydrocarbons are the worst uh, thing in the world. You got to get away from oil in every which facet that you've ever thought of oil. But again, how you going to replace that? Well, you've got to use the metals, the miners. But when you've got a big shift in demand, which is what you're going to see and what you're seeing away from the hydrocarbons. The only thing you can replace it with is metals. And so again, copper, base metals, as well as precious metals are going to perform very, very well because of the lack of supply and then the big shifts in demand.
So, what do you think the effects of all of this EV renewable type of movement that we've had? I used to live in California, and I think they said by like 2030 or 2035, you can't sell a gas car anymore. And we started to see a lot more of these types of, whether it's a state or countries discussing it. And you hit the nail on the head when you said there's been a huge underinvestment in these things, but now all of a sudden it's almost like they just popped their head up at the table and they said, "We're doing this, and this," but we don't even have the mine infrastructure for these types of things. So, what type of impact do you think this infrastructure cycle will have on especially on copper, but metals in general?
Well, they oftentimes say you really need to look at government policy because it is a precursor for change. And by and large, I mean, this is a big, big shift that's being put in place without really looking at the ramifications of things. And aside from that, this whole mindset that we're moving away from the hydrocarbon needs to be looked at more and more carefully because you got to look at the supply. Just because you have a mining operation that's producing copper that goes into your electric vehicle, that's fine. But if you're using hydrocarbons and you're either burning diesel or you're coming from a coal-fired plant, then how clean is the copper? And so that's going to be something that's being more and more focused on as you want to have this electrification of the world. You've got to really keep in context in terms of what does your mine supply look like and how are you actually generating the metals and are you really moving away from the hydrocarbon like you really believe that you are? So again, I think it's a tremendous opportunity in terms of infrastructure spending. Infrastructure spending is going to be really critical for long-term job creation. It's called the Kuznets cycle, and actually, when you look at a government policy where infrastructure spending is kind of part of that policy, it's job creation for 20 plus years, and you've seen China implement it very, very nicely over the past, really going back to the 1990s with their growth, and really what drove a lot of that growth was infrastructure spending throughout the country. If you look at the state of the infrastructure in the United States, the real last true infrastructure build out in the United States was there in the 1950s. And so if you look at the life of these infrastructure projects, they're very, very limited. There's a finite life for a bridge, for example, because you have iron that holds the bridge up, but you got to galvanize it with zinc. That's what prevents it from corroding. But there's only a finite life for that, and you're looking, 50, maybe 80 years on the really extreme cases for galvanized steel. And the state of the infrastructure in the United States needs to be improved dramatically. And I think that anything that people agree of in terms of more debt coming on, one thing we probably agree on is if we can actually see it being spent in our favor, something that we use every day, whether it be a bridge, road, and all of that is going to be a big demand driver for commodities. Aside from that is also the infrastructure needed for the electric vehicle space. I mean, one thing to have an electric vehicle, but you need all that infrastructure, these charging stations, all that is going to take a vast amount of base metals in commodities in general to get that all taken care of. And it's a great place to be to take advantage of that. But oftentimes I do think that policies are made without broader context of what the big impact will be in the real world.
Do you believe that we're headed into the similar type of bull run that there was in commodities in the 80s, where we've had many of these types of guests, the Rick Rules, the Doug Caseys, that they really made their fortune or during that market. And I wonder, how do you, in your experience or opinion, how do you think that this will stack up compared to that? Let's say over the next, you said the infrastructure movement is really a 15, 20 year type of job creation. So how do you think the next 10, 15, 20 years for commodities and metals stacks up to, let's say, the 80s?
Well, I think you're going to have a big move in commodities. I think we're seeing that right now. And I think that's something you can't ignore. The only thing that's throwing it off on the precious metal side of the thing is the advent of the cryptocurrency. And while I do agree with cryptocurrencies to some regard, I think that a lot of people are going to be very, very hurt, particularly when they're getting the more fatty types of crypto coins. I mean, the fact that you have a meme coin is, at least for me, quite disturbing. But in terms of overall, I think that we're going to be in a nice commodity cycle that's going to last a number of years, and that's going to really be what's needed are going to be higher prices, because higher prices are going to incentivize capital expenditures for exploration and new mine discoveries and new development of new deposits. And at some point in the future, that mine supply is going to come online, and then really kind of dampen prices at a higher base level than we're currently seeing right now. But again, I do think that we are in a super cycle for commodities. It's unfortunate it's driven based, really majority of it on government policy and really their inability to constrain themselves on spending.
Yeah, it is an interesting point. It is kind of bizarre that the commodities market that we're bull market that we're discussing is pretty much at least predicated entirely upon this type of, as you called it, a lack of respect for the currency. It is a bizarre makings of the market, but when you look at it, it's hard for me to say that they're going to do anything other than what they're putting the cards on the table. They're saying,
Well, yeah, no, they're not going to do anything differently. I mean, they've made it very, very clear. I don't really try to keep track because it makes me sick. But before they even, stamped the first 1.9 trillion, they're talking about 2.3 trillion. And the real disappointing about the 2.3 trillion in infrastructure spending is when you actually look at the bill, maybe 400 billion of it's actually infrastructure, and the rest is just more handouts, or to pay for some other promise that they're making. And this whole entitlement, where everyone's entitled to certain things, is not the way things were in previous generations. And at some point, something's going to give, or the United States that we knew it to be will not be the United States of the future. That's just the unfortunate truth.
and what do you think are the ways that an individual can best prepare themselves? Because I'm on the same page with you. I mean, the larger ramifications of this, we can speculate on them, but I think for the most part, we are underestimating them. What do you think the best ways an individual can prepare themselves?
Well, I think the biggest thing is to move away from the US dollar in any way you can. Obviously, the equity markets seem a bit frothy. They did top out, and kind of you can see that resistance here. And you can also see the euphoria that is kind of subsiding, but this risk on, I've never seen anything quite like it, really since the dot com bubble that occurred in the early 2000s there, the late 90s. So with that being said, again, I'm moving away predominantly from the dollar, any kind of government currency, and into hard assets, real assets, whether it be real estate, and then obviously the biggest investment I've made is going to be in myself and in the company we're operating, but that's exposure to the precious and base metal space.
So let's talk a little bit about your company, CalNX. So um, you guys have been also focusing in on copper a bit, or quite a bit. What is your assessment on moving forward? Let's start with copper. With your company, is it just so obvious that there's a understatement of how much copper is going to be needed, and it's an important place to be as a miner, or
Well,
explain?
absolutely. So there's three different subsets within the mining business, and where you really get the biggest value creation and create the most wealth for your shareholders, which is what we're out to do, is going to be in the exploratory phase. That's where you actually make a discovery and you define a deposit that potentially will ultimately become a mine. Obviously, it's going to have the higher risk because it's very, very early stage, just like any early stage company that goes on to be doing something great. There's obviously a risk they've got to overcome. In what we're doing in Manitoba is, and actually across the entire portfolio, is we look to mitigate risks in many ways. But one of the ways we do that is we've made a focus of exploring within Canadian mining jurisdictions. So we're in tier one jurisdictions, so where rule of laws is there. We're not in a lot of these more risky jurisdictions around the world, and you can imagine where those would be. But we're focused on in proximity to infrastructure, because this infrastructure is there. Uh, Billions and billions of dollars of capex goes into this infrastructure, and that reduces your upfront hurdles to making a discovery economic. Not only that, we've made the rainbow discovery, which, as you alluded to, is our high grade copper, gold, silver, and zinc discovery in Manitoba. We're doing so at a time where that infrastructure is in need of a new discovery, and there's a lot of jobs that rely on that. And that's going to, really, from a community support standpoint, from policymakers support standpoint, and just getting the job done standpoint, is really very quite helpful. And so, with that being said, we're making exceptionally high grade discovery. We're stepping out and growing that discovery with each drill hole that we drill, and we're looking to announce to the market. But ultimately, we're looking to unlock shareholder value by making a big discovery that's going to have an immediate need and potential for near-term production, given the precedent for a new discovery that community needs, and where it's located, and at a time that's where demand is there. And in addition to that, we're really focused, and one of the reasons why we like the discovery, obviously, we like quite a bit, but the area is the geologic endowment. There's not many places around the world where you can get exceptionally high copper grades. If you look on a global basis, the average grade of copper that's mined is 0.5% copper. And a lot of those come from big, low grade open pit operations in more jurisdictionally unstable countries. For example, if you look at the murmurings out of Peru right now, in terms of the taxation or the nationalization potentially of the mining assets, that's a very real risk to supply, because again, they're probably not going to be as efficient mining that type of scenario. But again, if you look in terms of what is the energy source that's powering that, so you're not really getting away from the hydrocarbon. Again, if that power is not being supplied that with clean power. And in the case of the Rainbow discovery, the discovery has been made within 200 meters of a hydroelectric power line. So we're getting grades of copper. On average, you're looking at 5% copper equivalent roughly between all the drilling and the holes that we've intersected to date, which is 10 times the global average grade of copper out there. And that's really a huge potential. And when you layer on top the low cost clean power with the hydroelectric power that's already there and available, really puts us apart from a lot of other discoveries that are going to be made out there in the world, particularly that it's not remote, and it's not in a jurisdictionally unstable area, and it's not low grade.
So let's talk a little bit about gold and silver. What do you make of the price action of gold? We had, obviously, and silver. We had a really incredible run up until August or so last year, and it's stalled out. And what do you make of the stalling out, and what are your expectations moving forward?
Well, I think naturally it's any kind of move you have in any metal market or any stock or anything like that, you're gonna have peaks and troughs, and so that was you obviously saw strong demand come into the gold space. I think a lot of the luster in the precious metal space is being taken away by the advent of the cryptocurrencies, and just another tool to get away from an investor that be trying to get away from the U.S. dollar would more inherently naturally go to gold. So cryptos are definitely going to take some of that attention away. But longer term, I really like the precious metal space. I do think you're going to see higher gold prices. Certainly, I do think that silver's had a nice run, but silver's got a lot of legs to it, in my opinion. I think in terms of silver's got a better supply demand fundamental, in that the demand side isn't exclusively as a currency or jewelry. There's more industrial uses for silver, and so again, typically in an upcycle for commodities, you'll see silver outperform gold 2 to 1. That's just looking at history. So again, I do like the metals where they're at right now. In terms of pullbacks, it's natural to see a pullback, but I think you're in a secular bull market for the precious metals.
So I think his name's Mark Bristow. He's the CEO of Barrick, and I could be saying his last name wrong, but he said that he's kind of used words even like there's a crisis in the mining industry because of underfunding and underdevelopment of mines. And getting outside of just specifically the gold industry, when you just look at the broader base metals, you talk about infrastructure, EV, renewables, all these types of things like that. Give us an idea of that type of sentiment. Is it real? There's been a lot of discussion of look, we're saying you want all this gold, all this silver, all this copper, or all these base metals, for all this infrastructure, but it's been drastically underfunded. And now you're basically going to put the economy on long-term life support with infrastructure bills. Um, is the are the metals even out there for it? And what do you make of Barrick CEO saying that, and many other CEOs of publicly traded mining companies, whether it's a copper company or a gold company, saying, look, there hasn't been the type of discoveries and mines coming online, and how does this affect us moving forward?
No, I absolutely agree with them. I live that every day. In terms of my business, is one of the focus I have to do is access capital because it is a capital intensive business in terms of exploration or mining in general. So with that being said, the capital's not there to fund these type of discoveries and exploration because again, it's high risk and you need the risk appetite to be there from the investors. But the investors are going to have the risk appetite to invest in exploration, development of new deposits. If the price action is not there for the commodity, if you don't have prices that will fund and sustain those exploration risks, then it's just not going to happen. And I think that the average person does not understand how challenging it is to make a discovery. The statistical odds are typically 1 in 4,000 drill targets ultimately becomes a producing mine. So again, that's 4,000 different exploration ideas and real thought out plans before drilling a target. And it's not the oil and gas business. Oil and gas business is very capital intensive, but your path to production is much more streamlined, and there's not as many risk factors that go into that compared to hard rock mining. So I completely agree, and I think that if you look on this demand side, you have a big shift of demand. I mean, I own a 1966 Mustang. I had it since I was 16 years old. That car's got about roughly 40 pounds per copper in it. If you look at a Tesla Model 3, you're looking at 150 pounds of copper.
Wow.
And if you go to an SUV like these Mercedes SUVs, you're looking at 250 pounds of copper.
Wow.
And that's just in the car. I go pick up my toothbrush, it buzzes too. Everywhere I touch there's an electrification of something, but there's no really tie to how does that come out of the ground or how do you get that. And if you look at historically in terms of exploration in these jurisdictions, these discoveries have been made very near surface. And so a lot of the easy discoveries have been made, so to speak. So the discoveries are becoming more and more challenging. I mean, if you look at the Flin Flon area where I mentioned we made the Rainbow discovery, the last big discovery in that camp's history was made in 1993-94 timeframe to feed that facility. And now it's coming to the end of mine life, and there hasn't been a new discovery made. And that's not because people haven't been trying. It's because discoveries for these type of deposits are very, very difficult to make. They're very, very capital intensive, and they're very, very time intensive. And a lot of these companies that are exploring don't have the ability to withstand these type of longer term cycles and have the investor support to facilitate to continue to explore in a particular area. You don't walk onto a property and drill 1 or 2 holes and suddenly you come up with a mine. It's just unfortunate how the business is, works. In terms of Pine Bay where we made the Rainbow, I think it was roughly on our 28th hole. And these are deeper holes, so much more costly than a shallow exploration campaign. So this is a very real scenario, and it's going to have a real impact. And you're seeing that impact right now, and that's going to lead to higher prices until new supply can be found to come online.
What do you make of people saying nationalizations of mines? And I want to bring this to you in a slightly different slant, because you're talking about how these discoveries haven't been made and they've been very underfunded, yet we have a government essentially promising all this infrastructure, which in other words is promising all this stuff in the ground that isn't being mined. And is there any way that you foresee the governments getting involved in these assets in the ground due to the necessity of their promised infrastructure, or no?
Well, I mean, you definitely see that in terms of China has been really, really aggressive in terms of mine supply for its economy and doing that. I don't think you're going to have that in the United States. I mean, listen, if you can tell me anything that the government runs effectively, I'm all ears. But I just have never seen a scenario where that's working out or where they have any kind of oversight on anything. Just doesn't lend itself to being successful. Not that it's not necessary, it's just that's the reality of the situation. I mean, look at NASA, look what SpaceX has done in terms of exploration and achievements for capital in the period of time they're looking to achieve that. and NASA's just now really kind of outsourcing all the kind of technology and innovation. The U.S. Postal Service. I mean, I get it; it's not the U.S. government, but might as well be. And I've just never seen a function where the U.S. government or any kind of government is really going to run as efficiently as as a private organization that's bread and butters to do that. Now, with that being said, do I think the government policy can be a big demand driver or shift to incentivize exploration? Absolutely, and that can be done with different tax breaks. It can do, at one point actually in the United States. Not that I'm a big uranium bull, but in uranium they actually put a artificial floor for the price of uranium during World War II to incentivize exploration and development of new uranium mines to come online, obviously to build bombs. So could they do that to build bridges and want to look for more domestic sources for metals? Yes. But we also need to keep in mind that mining as a kind of an industry has really been frowned upon by communities and the not in my backyard idea. And if you want to have metals domestically sourced, you got to have a different mindset to this entire process. And you have that in Canada, for example. I mean, you've got mining in every single province in Canada. You've got a rule of law, permitting regime. You've got a workforce that understands it. And so I think they've got a lot of things right in Canada in terms of their approach to incentivizing exploration development of new mines.
Fair point. So let's talk a little bit about you. So you are CEO of CLLXF. You've been running businesses, and one of the things that I like to talk to people about is some of the most important things that you've learned, or some of the most important things to help the audience, because there's a lot of people that have really realized, look, the window, their freedom maybe came crashing down a little bit over the last while, or maybe they lost their business, or maybe they realize they need to increase their income. And I'm wondering, what do you think are the most important philosophies that have aided your success as a business person, or the things that you think are important for someone that is looking to grow their freedoms, their business, their money moving forward?
Well, I think the biggest thing is just relying on yourself and in what you believe in and sticking to that. I mean, in terms of what it was made me successful in my life is really having a conviction in an unwavering conviction and belief that you're going to be successful in what you're doing. And like I mentioned, in terms of exploration, it takes a lot of time. And that's one of the things I've learned the older I've gotten, is that nothing happens as fast as I want them to. And patience is truly a virtue. But also being consistent, persistent, and not giving up. In terms of exploration in Manitoba, for example, a lot of people would have looked at the exploration results that we had coming out of a big discovery hole in 2016 and figured, hey, just hang it up and don't give up. And we took a pause, and we then used new ideas and things that we learned elsewhere, and that's what led to success. And it wasn't giving up, but it was sticking with it, and just being persevering through difficult times. I mean, raising capital at difficult times, as well as making a discovery. Doesn't come as easy as you'd want it to, but the downs really teach you a lot of lessons that you can use on the way up.
Yeah, so it's an interesting industry because it's so cyclical, right? And there are some, big downturns. How are you able to, obviously it's a lot brighter future now, but how are you able to move through those, and keep your head screwed on and move confidently in the direction of your goals? Because there's a lot of people right now that, you know, they're dealing with some difficult times. And so I'm curious how you've been able to manage that as an entrepreneur.
Yeah, absolutely. So, I mean, I can tell you that I put, 90+% of my net worth into Calinex, and, been running the company for a number of years. And we had an, equity valuation probably around where we have it today. And the zinc market kind of fell out of bed. And, with that being said, the market temporarily, they didn't really believe in the future of the company, because we hadn't, hit the discovery holes that we hit in Manitoba at the time. We hadn't hit the near surface discoveries that we hit in New Brunswick and what have you. And so the market sold down the company to cash. So imagine you put 90% of your net worth and everything that you work, and I'm not talking a 9 to 5 type of working. I mean, this is like my entire life in many ways. And then you turn around and no one believes in anything that you've accomplished. And the company that you built is worth what the cash is in the treasury. So that's a very humbling experience. And a lot of people might look at it and go, "Hey, I'm just going to walk away." But you just had to take a change of mindset, and really that can change your outcome. I think positive mindsets lead to positive outcomes. And in terms of my case, I think mindfulness and meditation is very, very critical, because again, if you can make yourself sick by your thoughts, then you can also make yourself healthy by your thoughts. So that would be, I think, my biggest recommendation, is to always keep a positive mindset and attitude, no matter how difficult it might seem.
Powerful. I love that. So, tell us a little bit about as we wrap up. Tell us a little bit about your goals moving forward with CLLXF.
Well, again, our long-term goal for CLLXF is long-term job creation through discovery. And it happens to be a lot easier to do that when the metals and markets are working out. And the drill bit's been very, very kind to us over the past 12 months. But again, that was the ultimate goal, is to create long-term jobs through discovery. In the town of Flin Flon, Manitoba, as I mentioned, the 777 mine is due to shut down next year. It's a town of 5,000 people. Over 800 jobs is tied to that mine, and it's forecasted to go to 50 jobs by 2023. And so our focus, and the biggest focus for us for the immediate term, is to delineate the discovery of the Rainbow deposit to size, and with the ultimate goal to have the next big acre mine for that community, and create long-term jobs and a lot of tax revenue for the Canadian government and the province of Manitoba. We also want to execute in terms of our exploration objectives in the Maritimes and New Brunswick. We've got those 2 near-surface silver discoveries, and expand upon those. Again, that's an area that's got over 20% unemployment rate right now. And mining
Wow.
historically had been a big industry. So that's the focus, in why I wake up every morning, and the rest of the team is to make these discoveries and be successful, so that we can create jobs and really be the building blocks to the global economy. I just read recently another big CEO was interviewed, but 45% of economic activity can be tied to mining in some way or another.
Wow.
And so we have a tall order ahead of us, but that's what's so exciting about it all.
Yeah, the government's going to need those tax revenues out there in Canada.
But to give you a context, in terms of how big of a tax revenue these type of these, the 777 mine that is due to shut down is paid in excess of $1 billion in tax revenue. So these are big opportunities when you find a big high grade deposit, which is what we're looking to do. So again, I mean, it stands to benefit everyone when we're successful.
Awesome, absolutely. So let us know where we can find a bit more about you and CLLXF.
Yeah, absolutely. You can visit our website at CLLXF.ca. And if you're interested in purchasing shares of the company and becoming a shareholder, you can do so on the Toronto Venture Exchange under the ticker CNX, or in the United States under the ticker CLLXF over the counter.
Max, give us your copper price predictions for 2021, 2022. We'll call it the next 12 months.
I think we go over $5 copper quite easy. I'll call it $5.55 copper, just because I like clean numbers.
All right. Give us your silver price prediction over the next 12 or so months.
In terms of silver, I think silver could go north of 35. That's the number that would kind of popped.
All right. Give us your gold price prediction. Can gold recapture 2000?
Definitely.
All right. So
need to keep spreading. It's just every time they talk about stim checks coming out, just you can go ahead and bet the commodity prices are going to go higher.
All right, good deal. So for everyone listening, please make sure you hit the like button on this side or that side, wherever you find it, to send this video out to the YouTube universe so more people see it. Now give us your price predictions for gold, silver, copper, right there down below for the next 12 months. And we want to thank Mr. Max Porterfield for coming on today. And it was great to talk to you.
Likewise.